And now for a Next News special report.
Brace yourselves for a jaw-dropping expose that will shatter your trust in the stock market. In this groundbreaking special report, we rip open the curtain on Wall Street's seedy underbelly, revealing the shocking truth about the Nasdaq's sordid past and the impending danger lurking in today's market. With Cathie Wood's audacious $2,000 price target for Tesla sending shockwaves through the financial world, well, we're going to draw some alarming parallels to the notorious dot-com era. As the ghost of the dot-com bubble rears its ugly head, the question on everyone's mind is, are we doomed to repeat history's mistakes? We will leave no stone unturned unmasking the corrupt practices of the Wall Street analysts and their role in leading investors to ruin. And you won't believe what we uncover, so stay tuned for a mind-blowing final thought that will change the way you view the market forever. Now, folks, are you tired of being left in the dark while Wall Street analysts line their pockets? Well, it's time to take control of your financial future with Noble Gold Investments. Just like how analysts pimped out lemon companies during dot-com era, today's market is full of uncertainty, but with Noble Gold Investments, you can protect your wealth by diversifying into gold and silver. Don't just take my word for it. Countless, thousands literally, of satisfied customers have left them 5-star reviews and an A+ rating with the Better Business Bureau, and now, for a limited time, Noble Gold Investments is giving away a free quarter-ounce British Gold Standard coin for qualified accounts. Visit nextnewsgold.com or call that number on the screen, 877-646-5347, and tell them that Next News sent you. Now, in a shocking revelation, the ghosts of the dot-com era seem to be resurfacing in today's tumultuous market. As investors nervously watch the erratic fluctuations of the Nasdaq, one can't help but draw unsettling parallels to the catastrophic bubble that burst in the late 90s. The Nasdaq, once a symbol of innovation and progress, now stands as a haunting reminder of the dangers of unchecked optimism and rampant speculation. Now, at the center of this brewing storm is Cathie Wood, the enigmatic CEO and Chief Investment Officer of ARK Investment Management. With a brazen price target of $2,000 on Tesla, Wood has positioned herself as a modern-day equivalent of Henry Blodgett and Jack Rubman, the infamous analysts who played the pivotal role fueling the dot-com frenzy. Now, her unwavering faith in Tesla, despite the company's staggering $300 billion market plunge since June of last year, has raised eyebrows and sparked heated debates among market experts. Take a look at this.
Just think about this. Tesla is doing it profitably and cutting prices in the process. It's pretty phenomenal. Can I just go the convergence idea?
Yeah.
I have one more. Robots, energy storage, they will be electric, 75, 85% in 5 years. And then artificial intelligence. This is the biggest AI project in the world. If NVIDIA is worth what it's worth, and we believe it's worth what the market's paying for. We think it's going to have an inventory correction out there. It happens regularly.
Okay.
You know, we've been through very many inventory cycles.
Right.
I have over the years with NVIDIA. So definitely going to see an inventory cycle as companies reassess, okay, wait, how do we get ready for this AI age? And there is a reassessment process. We're going through it ourselves. But if NVIDIA is, if its valuation is correct, this AI project has to work.
What is Tesla worth? If you were willing to sell it at $300 or $400 and you're buying it now, what is it worth in 5 years?
$2,000. We're in print on that.
$2,000.
Yes.
Let me ask you another.
And think about that. It's down 60%. This reminds me very much of 2018-19. We're in a bit of a trading range, and we will be until more and more analysts, investors understand how provocative the convergence of these three technologies is going to be.
Now, Wood's price target, which stands at a staggering $1,800 away from the average analyst prediction, seems to be driven by blind faith more than sound financial analysts. As Tesla's stock continues to experience turbulent swings, one can't help but question the wisdom of placing such a high valuation on a company that operates in an increasingly competitive and volatile market. But the concerns surrounding Tesla and Cathie Wood are just the tip of the iceberg. The Nasdaq once again finds itself at the center of a potential market meltdown. Its checkered past, marred by instances of price fixing and the promotion of hollow companies, has done little to instill confidence in investors. The exchange seems to have learned little from its past mistakes, as evidenced by the continued presence of companies like Trump Media and Technology Group, a startup with a market cap of $5.5 billion and a paltry $4.13 million in revenues. However, its explosive growth and its explosion on the scene is still a force to be reckoned with. Now, the parallels to the dot-com era are indeed striking. Just as in the late 1990s, we see a market driven by hype, speculation, and the promise of astronomical returns. Analysts once again find themselves in the role of cheerleaders, promoting companies with questionable fundamentals and little regard for the long-term consequences. The allure of quick profits and the fear of missing out on the next big thing have created a dangerous cocktail that threatens to intoxicate even the most seasoned investors. But perhaps the most disturbing aspect of the unfolding saga is the role of Wall Street analysts in perpetuating the cycle of destruction. These so-called experts, who are meant to provide unbiased and accurate assessments of companies, have instead become nothing more than glorified salesmen. They pimp out lemon companies as hot IPOs, all while privately disparaging them as dogs and crap. The very same institutions that were meant to be the gatekeepers of financial integrity have become the architects of its own downfall. So as we stand on the precipice of another potential market catastrophe, it's imperative that we heed the lessons of the past. We can't allow ourselves to be swept up in the euphoria of the moment, blinded by the promise of easy money and the allure of the next big thing. We must demand transparency, accountability, and integrity from the institutions that shape our financial landscape. If you got value from this report, tap subscribe. My final thought is next. The echoes of the dot-com era serve as a chilling reminder of the dangers that lurk beneath the surface of our market. As we witness the resurrection of the same reckless optimism and speculative frenzy that brought the Nasdaq to its knees, we must ask ourselves, have we truly learned from our past mistakes? The unchecked power of Wall Street analysts, the blind faith in companies with questionable fundamentals, and the insatiable appetite for quick profits all point to a market that is once again teetering on the edge of disaster. But amidst the chaos, there is a glimmer of hope. By arming ourselves with knowledge, demanding accountability, and approaching the market with a healthy dose of skepticism, we can navigate these treacherous waters and emerge stronger, wiser, and more resilient. The future of our financial landscape depends on it. Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.